Hello, good morning, and welcome to Central Bank's webinar on improving payment system in Trinidad and Tobago. I'd like to say a special good morning to our webinar participants, viewers on the live stream, as well as to the Governor and Deputy Governor of the Central Bank, our Inspector of Financial Institutions, directors, management, and staff of the Central Bank of Trinidad and Tobago. This morning's webinar, the format will be a half-hour presentation by our panelists, followed by an hour for questions and answers. For those of you on the live stream, you'll be able to submit your questions through Facebook, YouTube, or to the bank's email address at cbttevents@central-bank.org.tt. Now, this morning, it's my pleasure to introduce our panelists. With me this morning, I have our Deputy Inspector of Financial Institutions, Mrs. Michelle Francis Panto. We have our Senior Manager of Legal, Contract, and Corporate Secretarial Services, Ms. Nicole Chapman. And we have our Assistant Manager of the Payment Systems Oversight Division, Ms. Leslie Ann Devines. You will hear from our panelists on the payment system, what has been taking place domestically, the central bank's role, and our plans for the future. And at this time, I'd like to turn it over to our Deputy Inspector, Michelle Francis Panto, to start off today's presentation.
Good morning, all. Welcome to our webinar on improving the payment system in Trinidad and Tobago. In light of the rapid technological developments occurring in the area of payments internationally, regionally, and domestically, the central bank has been attuning its strategic plan to address these new developments, including those utilizing financial technology or fintech, such as e-money, virtual assets, and central bank digital currency. Our presentation today will proceed as follows. I will define what is a payment system, why it is important, and highlight those main payment systems in the domestic landscape. I will then hand over to Nicole, who will discuss why payment system reform is needed and what we are doing about it in Trinidad and Tobago. Leslie Ann will follow and highlight key proposals in the policy proposal document to inform a new payment systems law. And I will conclude with international developments around enhancing cross-border payments and how what we are doing gels with this wider international initiative. First of all, to define what is a payment system, the Bank for International Settlement defines a payment system as a set of instruments, procedures, and rules for the transfer of funds between or among participants. The system includes the participants and the entity operating the arrangement. Our policy document, however, proposes an alternative, although aligned definition, which is any organized set of infrastructure, persons, procedures, and rules allowing the transfer of funds, including by means of payment instruments or the discharge of obligations on a gross or net basis, and includes interbank or non-interbank payment systems. So why is the payment system important to you? The payment system is used by all persons, whether government, business, or individuals engaging in economic activity. As such, it is the backbone of the economy and allows for the effective clearance and settlement of monetary and financial transactions among parties. In this way, a payment system supports financial stability and confidence in the financial system. A third reason is that it facilitates economic activity, transfer of money, and e-commerce. And finally, it can be used as a means of promoting financial inclusion. This diagram seeks to illustrate this country's payment system architecture. I will only highlight some key elements. At the core of the payment system is the real-time gross settlement or RTGS system, which is owned and operated by the central bank. It processes large value transactions of $500,000 and over and time-critical payments on behalf of the central bank, its customers, and the 8 commercial banks that are direct participants. In addition to the large value payment system, there are a number of retail payment systems that use the RTGS for settlement of payments, namely the Automated Clearinghouse, or ACH, which clears large volumes of low-value transactions under $500,000 on a batch basis and within a 24-hour period. Direct participation in the ACH is currently only available to the commercial banks and the central bank. There is also a check clearing arrangement, which is partially automated, and plans are afoot to fully automate this. What everyone will be familiar with, though, is the local debit card network, or LINKS network, that processes point of sale and ATM transactions. That is operated by Infolink Services Limited, which is owned by the 4 largest commercial banks. More recently, we are seeing the emergence of those players on the lower left of the diagram. That is the non-bank payment service providers and technology firms offering payment services utilizing financial technology, such as cloud computing, application programming interface, or APIs, and quick response, or QR codes, to facilitate online payments and remittances. Therefore, the evolution in the payments landscape, which has been given that added thrust by the COVID-19 pandemic, calls for payment system reform legislatively, infrastructurally, and institutionally. I will now turn you over to Nicole, who will provide more insight in these areas.
Thank you, Michelle, and thanks to everyone for joining us for this exciting subject. Now, when you make a payment, you would see your act of paying with a card or paying online and money coming out of your account to pay the merchant. What Michelle's and Leslie's last slide did was to pull the curtain back and to reveal all the moving parts of the payment system that are involved behind the scene in verifying, clearing, and settling that payment between you and the merchant. Payment system reform is needed to ensure that all the parts in the payments machinery are operating safely and efficiently and evolve with the emerging technology. But first, to understand where we're going, it's important to know where we came from. The central bank began modernizing the country's payment system in the early 2000s. The bank established a Payment System Council and launched 2 pivotal automated systems, the real-time gross settlement system for large value payments in 2004, and 2 years later, the automated clearinghouse for low value payments with direct remote access by all commercial banks. In 2008, landmark reform came with the new Financial Institutions Act and the consequential amendment to the Central Bank Act at the same time, marking the beginning of the central bank's statutory role as the payment system regulator. 2011 saw important supportive legislative reform with the passage of the Data Protection Act for the protection of personal information, which includes information on financial transactions and records, and applies to local and cross-border disclosures, as well as the Electronic Transactions Act to give legal equivalence to e-documents and e-signatures. We look forward to these acts being fully proclaimed. The payment system guidelines followed, and in 2014, the Exchequer and Audit Act was amended, allowing government, the single largest issuer of checks, to shift to faster electronic payments options. Between 2015 and 2020, having officially adopted the international standards under the principles of financial market infrastructures, the bank rolled out the PMFIs and its fintech policy. In 2020, a sea change occurred with the introduction of the e-money issuer order, which for the first time extended e-money business beyond banks to a wider category of entities. As we stand in 2021, the bank is again seeking to modernize the legal and infrastructural landscape. We on this panel are especially pleased that the policy paper for a new Payment Systems Act is now out for public consultation, and we invite everyone to participate. We are also working on a joint regulatory sandbox to go beyond e-money for other types of fintechs and on upgrading the RTGS. The bank will also be exploring the very topical central bank digital currency as part of its strategic focus. This slide captures the drivers for payment system reform. And as you run through the thread of it, reforms are needed to keep pace with innovation, to ensure efficiency in national and cross-border payments, to better reflect the PFMIs and other international standards, to safeguard the payment ecosystem from internal and external shocks, to enhance the protection of consumers and users from loss, fraud, and service failures. A strong imperative is also the thrust to foster e-commerce, cashless payments, and financial inclusion for the unbanked community. Reforms are also needed to upgrade legacy infrastructure and to treat with the current fragmented and inadequate legislative framework. The current legislative framework is dispersed in 3 places: the Central Bank Act, the Financial Institutions Act, and the e-money order. There are also 4 guidelines to assist with licensing and registration. The Central Bank Act amendment in Section 36CC was quite significant, as it expanded the bank's purview beyond banking and insurance and into the supervision of all payment systems and the electronic transfer of funds, including money remittance business. It is stated in broad terms, calling for a supportive framework. The 2008 FIA was revolutionary in 3 main ways. Firstly, the central bank now has an express mandate and powers for the oversight of interbank payment systems. Secondly, the principle of settlement finality was finally entrenched in law, giving clear direction on how to treat with an insolvent participant. And thirdly, for the first time, the notion of e-money had a legal definition and a regulatory framework. The FIA contains very good provisions for oversight, which adhere to Principle 1 of the PFMIs on requirements for a clear legal basis, and Principles 5 and 8 on collateral and settlement finality. But these apply only to interbank payment systems and not to non-interbank systems. The e-money issue order was made pursuant to Section 17(4) of the Financial Institutions Act and sets out the regulatory regime for domestic e-money business. Because it came out of the FIA, a law which governed banks, it is entity-based and specifies a list of entities other than banks that can now do e-money business. The regime includes fit and proper, capital, and risk management requirements. There are also specific safeguards for consumers and users, such as requiring EMIs to have separate accounts, to hold a float, to disclose fees and charges, and to have plain language contractual terms, and to install adequate complaints procedures. The order also created the first legal basis for sandboxing through the mechanism of a provisional registration. But all of this is limited to e-money issuers only and does not extend to other payment system activities. The imperative for reform is therefore one of streamlining and enhancing. The fragmented legislative pieces need to be streamlined into one comprehensive act with clear definitions and a specific mandate for the central bank. The focus should be to streamline licenses to be activity-based for not only e-money issuance, but also a wider range of payment service activities. The regulatory framework should also apply to all payment systems, both interbank and non-interbank, and treat across the board with systemic risks. We would also want to enhance and strengthen the legal model for extending sandboxing to all payment service activities, and not only e-money, and by adding an effective and flexible range of enforcement powers, including court-enforced injunctions, criminal and administrative sanctions, also addressing the unique sector-specific risks around governance, settlement, interoperability, user protection, and AML/CFT risks. Furthermore, we'd want to add greater formality to the National Payment Systems Council. So what are we doing, and how is our checklist of current strategies going? As you see, we've completed 4 major initiatives and have 6 actively in hand. We established a joint FinTech Steering Committee in 2019 with our regulatory partners, the TTSEC and the FIU, which meets on a regular basis. On October 2nd, 2020, we jointly launched the Innovation Hub. The e-money issue order is in operation and the policy document for a new act is completed. We are working towards the revision of guidelines, the drafting of the new Payment Systems Act, and completing the check truncation project. Also on the horizon is the exploration of central bank digital currency, as many of our fellow central banks are doing, and enhancing cross-border payments, which Michelle will speak to in much more detail later on. At this time, I hand over to Leslie, who will explain some of our key proposals. Leslie?
Thank you, Nicole, and good morning again, everyone. You just heard Nicole express urgency for the development of comprehensive payment system legislation that is modern and flexible to address the deficiencies in the legal framework and to allow the innovative payment services to be safely accommodated into the domestic space. To this end, as you heard, the central bank developed a policy proposal document which was issued for stakeholder consultation. So highlighted on the slide are the key proposals in the policy that will aim to inform the drafting of the payment system bill. So firstly, one of the key proposals is the designation for an oversight of a systemically important payment system and significant retail payment system, and a regulatory regime for other payment systems. Further, the second major proposal is a licensing regime that is activity-based and risk-focused for treating with payment service providers that offer varying payment services. It also contain provisions for treating with risk and concerns. It includes general supervision and enforcement powers to enable the central bank to appropriately supervise, regulate, and oversee the payment system, and other proposals regarding which entities or activities should be exempted from licensing or registration under the proposed bill, and which activities should be restricted or prohibited by the payment service providers. It also addresses governance and proposes that the National Payment System Council be formally established in law. So I will now elaborate a bit more on some of these key proposals. So the next slide looks at what the designation entails. And as you know, the smooth functioning of the payment system is important for maintaining stability and efficiency and instilling confidence in the payment system. As such, it is important that the central bank conduct oversight to ensure the smooth functioning of the payment system. And this oversight is aimed at addressing the range of risks that can arise in the payment system that, if not well managed, can cause major disruptions and pose a threat to financial stability. As such, the policy proposal document recommends that the central bank be given designation power, which will allow it to designate which payment system will be subject to robust oversight in accordance with the principles for financial market infrastructure, and those that will be subjected to less intense oversight. Also shown on the diagram, the central bank will designate a payment system for oversight if any of these considerations apply. So a disruption in the operations of the payment system could negatively impact financial stability or affect the public confidence in the payment system, or where the designation is in the interest of the public. Also highlighted on that slide in the adjacent diagram are the criteria used to identify those payment systems that are systemically important. And a systemically important payment system is one that has the potential to trigger or transmit systemic disruptions. And the criteria used in making this determination could include whether it is the sole payment system in the country or the principal payment system in terms of the aggregate value of payments, or whether the payment system handles mainly time-critical, high-value payments. Also, whether it settles payments for other payment systems and systemically important financial market infrastructure. A significant payment system, though, may not be systemic, but could cause significant disruptions to segments of the economy where it is widely used. And the criteria then can include if it handles a large volume of small value transactions where the aggregate value can be significant. A payment system that does not meet these criteria will not be designated, but will be subjected to lighter regulations. Another very important proposal that is very different from what currently prevails is the introduction of a licensing regime for payment service providers that is activity-based and risk-focused. The licensing regime focuses on those activities that entail processing funds or acquiring merchant transactions, and where the payment service provider interacts directly with merchants or consumers. So it is proposed that the payment service provider be granted a single payment service provider license that will allow an entity to undertake one or more classes of payments. So as highlighted on the slide, the policy puts forward 6 classes of payment services that will be regulated. So firstly, the account issuance. This refers to the service of issuing, maintaining, or operating a payment account. Secondly, merchant acquisition refers to the service of accepting and processing a payment transaction for a merchant under a contract, right? And this will result in the transfer of money to the merchants, and usually involves the provision of point-of-sale terminals or an online payment gateway. Domestic money transfer refers to the service of providing local funds transfer between parties located in Trinidad and Tobago. And then we have cross-border transfer, which refers to the service of providing funds transfer between parties that are located in different jurisdictions. But it is important to highlight that this service will require the entity to be authorized first under the Exchange Control Act for incidental currency conversion for the purpose of remitting funds and receiving funds. Also, electronic money issuance, the service of issuing e-money for making payments to merchants or transferring funds to other individuals. And also, the central bank intends to regulate virtual asset services where a person uses these to undertake activities falling under its remit, such as payments and transfers. For the purpose of the bill, virtual assets will be defined as any digital representation of value that can be digitally stored, traded, or transferred, and can be used for payment or investment purposes. And and virtual assets do not include digital representation of fiat currencies. Going on to the next slide, just to highlight the main regulatory risk and concerns, the central bank, in granting a license to the payment service provider, will take into consideration the key risks highlighted, such as consumer protection, where persons with e-money accounts may not be adequately protected from insolvency of the e-money issuer if it were to occur, and money laundering and terrorist financing risk, the risk that the payment service may be used for illicit activities, interoperability, if persons are unable to make payments seamlessly across the various payment service providers, and then cyber or technology risk. It is important to note that each of these risks may vary or become more pronounced depending on the nature, scale, and complexity of the payment activities being considered by the payment service provider. As such, the payment service provider will be required to develop and implement risk mitigating measures that are commensurate with the risk surrounding its class of license. Moving on to the next slide, this slide highlights the main regulatory requirements for payment service providers and the designated payment system operators. These requirements include that the entity must be incorporated as a company under the Companies Act with a permanent place of business or registered office in Trinidad and Tobago, that the shareholders, directors, and officers must be fit and proper. The entity should have sound financial conditions. There are capital requirements and application and annual fees, robust risk management framework. And while the regulatory requirements are the same, as I mentioned, they may vary in terms of the capital requirements and the risk management frameworks, which will be, again, influenced by the business model, the nature, size, and complexity of the business. For designated payment system, they will be required to meet the robust requirements of the PFMIs, the Principles of Financial Market Infrastructure, and ensure that its operating rules and procedures are adequate and in keeping with the PFMIs. The policy also puts forward those entities and activities that should be exempted. So firstly, commercial banks and other non-bank financial institutions licensed under the FIA will be excluded. Closed loop payment schemes, such as those with food vouchers and reward or loyalty programs. Payment service providers who conduct only bill payments on behalf of utility companies. Technology service providers who only process data or develop or provide the enabling technology to assist others offering innovative means of payments, but do not themselves process or receive the funds to be transferred or issued or administered in any means of payment. And lastly, the services and systems owned and operated by the central bank shall be exempted from licensing and registration. In terms of the restricted activities on the adjacent diagram, it specifies those that will be prohibited. So again, payment service providers will be prohibited from engaging in lending and deposit-taking activities, since these are restricted to licensees under the Financial Institutions Act. E-money issued by the payment service provider is not to be considered a deposit and will not be subject to deposit insurance. A payment service provider would be prohibited from providing any class of payments through an agent unless the agent is approved by the bank. Further, a PSP will be prohibited from using any customer money or interest earned on the customer money to finance any of its own business activity or activities. There would also be a general prohibition against solicitation and advertising by unregulated persons. Also, the policy puts forward limitations on the sizes of payment and e-money accounts, including e-wallets, as well as the withdrawal of cash, in order to reduce the amount of cash and promote cashless payments. So I will end this segment by looking at the powers, the range of powers that the central bank will require to have to effectively supervise the payment system. And these general powers in respect of the payment system should allow the bank to obtain information in relation to any payment system and payment service provider, including the power to conduct on and off-site inspections and investigations without hindrances, to appoint subject matter experts, to keep matters to licensed or designated payment system confidential, to facilitate cooperation and information sharing with other local and foreign regulatory authorities, to exercise emergency powers in relation to designation of payment systems and systemically important payment systems, and to enforce compliance through compliance directions, administrative fines, court enforcement of directions, and to issue guidelines and notices. So I've concluded my high-level overview of these key proposals in the policy. And I take the opportunity to remind you that the deadline for submitting your comments on the bill is on June 30th, and we look forward to receiving your feedback. I now hand over to Michelle. Thank you.
Thank you, Leslie. So internationally, the Financial Stability Board and the Committee on Payment and Market Infrastructures are in collaboration with other key standard-setting bodies, such as the Financial Action Task Force, which is the standard setter on AML-CFT matters, to enhance cross-border payments. Cross-border payments suffer from key challenges on high cost, low speed, limited access, and insufficient transparency. Therefore, the G20 has made enhancing cross-border payments a priority, given that faster, cheaper, more transparent, and more inclusive cross-border payments, including remittances, would have widespread benefits for citizens and economies worldwide in terms of supporting economic growth, international trade, global development, and financial inclusion. As such, a roadmap to address the challenges faced by cross-border payments has been developed by the FSB in collaboration with the CPMI and other key organizations. The roadmap consists of 19 building blocks and 5 focus areas. Focus area 1 is foundational and treats with committing to a joint public and private sector vision. It comprises 3 building blocks, which includes setting up of targets at the global level for addressing the challenges of cost, speed, transparency, and access, and includes implementing international guidance and principles. Focus Area B involves coordinating on regulatory, supervisory, and oversight frameworks and comprises 5 building blocks, which seek to align regulatory, supervisory, and oversight powers across jurisdictions on the principle of same business, same risk, same rules. This focus area seeks to promote more consistent application of anti-money laundering and combating of terrorist financing, known as AML-CFT standards, and facilitating cross-border data exchange and information sharing on AML-CFT. Focus Area C, which involves improving existing payment infrastructures and arrangements, also consists of 5 building blocks. Current technical differences can add to cost and slow transactions. This area seeks to widen availability, strengthen links between payment systems, and reduce settlement risk by measures such as facilitating payment versus payment, extending and aligning operating hours between systems, and exploring reciprocal liquidity arrangements. Focus Area D, increasing data quality and straight-through processing by enhancing data and market practices, has 3 building blocks and involves promoting the adoption of common data formats, example, the ISO 20022 standard for data exchange. This area also seeks to examine the scope for a unique global identifier that links to the account information in payment transactions. Finally, Focus Area E involves exploring the potential role of new payment infrastructures and arrangements, and is the most forward-looking of all the focus areas, and seeks to examine the scope for new multilateral payment platforms, global stablecoin arrangements, and central bank digital currencies in enhancing cross-border payments. The central bank is a member of the FSB, which is the Financial Stability Board, and is in alignment with their roadmap. And there are a number of initiatives in train, but in the interest of time, I will highlight only a few key ones. In terms of the joint public and private sector vision, the government of Trinidad and Tobago has developed a roadmap to recovery, which includes digitization of the economy and the promotion of e-commerce, and the central bank has contributed to this. Since 2002, the central bank established a national payments system council that comprises members of both the public and private sector, tasked with common objectives of strengthening, developing, and improving the national payment system. The bank is also seeking to formalize this council in the new payment systems law. In terms of coordination of regulation, supervisory, and oversight frameworks, the central bank works closely with its regional counterparts and domestic regulators. The central bank is a member of the Caribbean Group of Banking Supervisors and also participates on the CARICOM FinTech Working Group and SEMLA Payments Forum. And these entities, these working groups, are collaborating to enhance cross-border payments, as several jurisdictions have faced the threat of de-risking by correspondent banks. On the domestic front, previous speakers would have spoken to the bank's collaboration with the Securities and Exchange Commission and the Financial Intelligence Unit on the Joint Regulatory Innovation Hub, for instance. We spoke in terms of improving existing payment infrastructures and arrangements. We spoke previously about looking at the new payment systems law and upgrade of the RTGS system, the ACH, and check clearing arrangements. plans are also in train to enhance data quality standards via amendment to the CBTT guidelines. Next slide, please. To require adoption of international standards such as ISO 222. And finally, we would have discussed that we are assessing the feasibility of a CBDC as well as possible regional integration of payment systems in collaboration with our regional regulators. The development of a national payment system requires the participation of a number of stakeholders. In this regard, the central bank has been receiving technical assistance from the IMF to develop comprehensive and modern payment systems legislation. The policy document to inform the new payment systems law, which Leslie just spoke about, was issued on May 17th for stakeholder consultation. And this webinar is also part of the process for raising awareness on that document and the need for wider payment system reform. We look forward to receiving your comprehensive comments on the policy document. So in closing, I cannot stress enough that the stakeholder collaboration is key to creating a modern and enabling environment for domestic and cross-border payments. The central bank is also exploring the feasibility of a CBDC, which is quite topical at present, and I expect that we will get some questions on this today. And very importantly, we are working to upgrade the existing payment system infrastructure to make it more modern and efficient. Thank you so much for your attention. This brings me to the end of the presentation, and I now hand you back to Renee, who will moderate the Q&A session.
Good morning, and thank you for our panelists for that very informative presentation on payment systems in Trinidad and Tobago. At this time, we'll jump to our Q&A session. Just as a reminder, for those of you joining us on the live streams, you can submit your questions via Facebook, YouTube, or to the central bank's email address, cbttevents@central-bank.org.tt. For those of you with us on WebEx, you're invited to submit your questions through the Q&A panel, the Q&A tab. Or if you wish to ask a question directly to our panelists, you can use the raise hand function, and we will bring you in to ask your question. We ask, if possible, that you also turn your camera on when asking your question. At this time, we open it up. We have one of our first questions in. For the panel, they're asking, if you apply for a license as a payment service provider, would you be allowed to do more than one class of business on that license?
The answer to that would be yes. The model that we are adopting or proposing to adopt would be modular, so that you can apply for different classes of payment system activity. Of course, the assessment for each type of business could be different, and the requirements for each one could be different, but you'll be issued one license, which would have the different classes of business that you authorize to take on and to conduct. I hope that answers the question. Michelle, I don't know if you want to add anything further on that.
No, I think you have spoken to it well. Thanks. Nothing to add.
Just a reminder for those on WebEx, you can either type your question into our Q&A tab, or you can raise your hand to ask your question to the panelists directly. Yes, we have a question from Mr. Downey. Mr. Downey, I'm going to bring you in to ask your question. We ask that you also put on your camera if possible.
Hi, morning all. Richard Downey here. Are you hearing me fine? Okay. Maybe just a related question. I saw the planned infrastructure upgrades around both the RTGS and, as you know, the ACH projects well underway. And one of the debates certainly is about instant payments through the ACH mechanism. Is there the view that this is almost becoming, a merging of the two, and with the RTGS upgrade, is there the need for both platforms, or do we see this as something to be decided in the coming year or so, or two, and because essentially what differentiates some of it, yes, one is batch oriented, but if we do go instant payments with the ACH platforms, I would gather you just need to adjust the value size, and would one cannibalize the other? Just my thoughts and looking for some feedback.
Okay, Leslie, can you take that question?
Good morning again, and thank you for that question. I think we will want to still incorporate the instant payment system because you touched on a good point. The main difference will be the value, and the ACH still, even though we say low value, you're dealing with a value that could be just under 500,000 going through the ACH. That's still a high value, right? So with your instant payments, if it's coming in, we may want to at first have the experience with it and probably have it come in even at a lower value than what is allowed under the ACH. So the overall answer is yes, we will still accommodate it initially and monitor to see how it progresses over time.
Thank you, Leslie. Okay, so the Q&A is picking up. We have a question from Mr. Jason Julian. He thanks the panel for its excellent presentation and is asking, in terms of cybersecurity, is there any additional comments or guidelines relating to this at this time?
Okay, thanks, Renee. I will take that one. At present, there are no additional guidelines, but we are in the process of looking at guidelines on cybersecurity. We are part of a regional working group on cybersecurity and cyber risk. And out of that regional working group, some principles-based guidelines are being developed, which we will leverage in terms of our own, developing our own guidelines on cybersecurity.
Thank you, Michelle. We have another question coming in off of our social media. How long do we envisage before having a live and functional digital currency?
If the writer is speaking about central bank digital currency, that is something that we are exploring. We've started research and it's on our strategic focus to explore. It is an area that will require some study. There are many things, many features, many implications to consider. There are a lot of central banks throughout the world that are right now conducting research, conducting pilots. Many have not landed on the need for a digital currency for their jurisdiction. It's really about the use case for your particular jurisdiction. So at this time, it is a matter of waiting for what the assessment delivers. And just on a side note, of course, it will require some legislative amendment to our Central Bank Act, which right now speaks to banknotes and coins being legal tender. So I hope that sort of answers the question. I don't know if anyone else on the panel would like to add anything there.
Cole, you would have mentioned in terms of the exploratory nature, that's where we are. And in terms of that stage, we are looking at what we will call the use case for CBDC, given where we are in terms of our current development and our planned payment system reform. Other jurisdictions would have had clear use cases and would have gone ahead with the launch of a digital currency. Others have done pilot projects and have decided not to launch as yet because their existing payment system is rather efficient. So we don't have an answer as yet in terms of when, but we are doing the foundational work to determine the if.
Thank you, Michelle and Nicole. I see a couple hands raised, so I'll first invite Mr. Shaquille Noel, to ask his question. And if possible, please turn your camera on when asking your question. Sure, go ahead.
As regards to digital currency, I know Leslie would have mentioned it in terms of exploring the regulatory processes to regulate or 1 second, right? Yeah, to regulate virtual assets and digital currency. Speaking as regards to the existing currencies in terms of the cryptocurrencies that's making a lot of news globally, would the regulations also cover the acceptance of, well, not just the acceptance or denial of cryptocurrency such as Bitcoin and what have you being accepted in Trinidad and Tobago as any form of payments? You may not be able to give a clear answer, but do you think the approach would be more friendly, or would it be something that would be seen as something to stay away from?
You're taking that one?
Yeah, and just a little clarity around your question, because you realize that we said in the PPD, in the policy, that where the virtual assets will be used to make payments or transfers, we will regulate it. But in addition to that, we still do our due diligence. So we have published notices as well, or awareness statements that still let persons know that if they are engaging in this type of asset, that there are risks associated in terms of the volatility of the Bitcoin or the type of crypto asset. So the answer is, from a payments perspective, if an entity is going to be doing the activity using the crypto asset or virtual asset to do the activity, it will be regulated in the space. I'm hoping that that's the question you're asking.
And just to add to what Leslie is saying, the reform that we're proposing would not be to regulate virtual currencies. What we are looking at is where the virtual currency is being used on a payment service or on a payment platform. So for the payment of a particular good or service. So that payment service, as Michelle would always say, same activity, same regulation. That payment service will be regulated. So in terms of the virtual currency, we still view them as assets, virtual assets, and not currencies. You take the risk associated with those. We will continue our thrust in terms of education and literacy on what those risks are. They are essentially not guaranteed by the central bank. There's no liability or claim on the central bank or any issuer in respect of those currencies. They fluctuate in value based on demand and supply. So there are those considerations if you want to purchase a virtual currency, but it is not falling within our regime in terms of initial coin offering, exchanges, that sort of thing. I hope that further clarifies.
Thank you, panelists. We have a raised hand from Mr. Young. Mr. Young, I'm bringing you in now. You can ask your question to the panelists.
And put my camera on ready. I have to tell you, you're very honored to have 3 female panelists. I mean, you made it, and credit to the governor for having such a fantastic female panel. I wanted to refer to the proposed acquisition of the ACH by ISL. And it appears from the way I see it that the domination of the payment system in a conventional manner will remain within the owners of ISL, which are, as Michelle mentioned earlier, the 4 major commercial banks. I believe that the whole strategy and future of ISL, by you gifting them the ACH, whilst they are also owners, is something that requires a little deeper thought, because I think there's an opportunity to embrace the electronic, the e-money payment system, see whether that could be in ISL, and also an opportunity for the fintech players, so the e-money issuers, to be part of it, because they seem to be always outside the loop. And then secondly, I also believe that ISL is an excellent platform for technology to be able to provide that national KYC, AML, rather than each going to each bank. And I know each bank have their own requirements, because we know the kind of, certainly when I was in the system, the licks and thunder I used to get when one branch asks the same customer, another branch asks the same customer the same information. So I think if we are talking about, moving the country forward in a digital way, I would suggest that ISL is a vehicle through which that could also be addressed. So fundamentally, I'm saying if what you've proposed seems to perpetuate the powers and the strength of the commercial banking system, and it doesn't give the opportunity for e-money issuers to be part of that whole system. And then secondly, it could also be a platform for KYC, ML, etc. Thank you.
Okay, Richard, thank you for your comments. I will start and other team members could add to the discussion. So in this forum, we cannot speak about any particular registrant or I'll just speak generally in terms of the plans. So the whole point of the payment system law is to open up the system, make it modern, have opportunities for access in terms of all persons who wish to and who meet the requirements in the law, right? So that will be addressed so that there will be, and persons now under the law and based on the principles for financial market infrastructures, which are best practice standards, things like interoperability, access regimes, all of those things would be addressed under the law or the regulations that are made pursuant to that law. So the intention is to open up the system once people meet the requirements. The law will also treat with things like mergers and acquisitions and competition and all of that. That would be part of the process as well, just like we have done with other legislation. So to answer your question kind of indirectly, we appreciate your comments and we will take them on board, and the law will seek to treat with some of the issues that you have raised.
Thank you, Michelle, and thank you, Mr. Young. Moving on, we have quite a few questions in our Q&A panel, so I'll throw these out to our panelists in rapid fire. So firstly, we have from Mr. Ian Chinapu. He asks, has the criteria for the different license classes been determined, and when will these be available?
So right now, we have the policy, right? But we will be developing the regulations around some of these things, some of the requirements, right? But as I would have highlighted in one of the slides, I would have indicated the different requirements around each of the PSPs. So in terms of where we said you must be established as a company under the Companies Act with a registered place of business in Trinidad and Tobago, where I identified capital requirements, where I identified the fitness and propriety. So that in general, right across the board, all classes identified will be required to meet. Where they vary is the type of risk that each one of these activities could present. And so you may have capital requirement varying across the board because of the type of activity. If it's just one activity and probably relatively low risk compared to one that is high risk, the risk management framework will have to be much more robust and your capital requirements will be much higher. Okay. I don't know if anybody has anything else they want to add.
Just to add that the details will be set out when we get to the drafting of the regulations. There will be more details on capital requirements, risk management requirements, and liquidity, those sorts of things. Okay.
Thank you, panelists. Our next question is from Mr. Jason Julian. And I'll ask Leslie again to take this one. Would there be any additional guidelines or constraints as it relates to data storage? And would data be allowed to be stored in the cloud or offshore?
So currently, we have said that if you're going to use a cloud provider, you will have to make sure it's a reputable one that will meet the requirements set out by the bank in terms of data security and ICT security. So all the requirements that the entity would be required to have if it was actually processing its data and keeping everything on premise, they would have to ensure that that third-party service provider is also meeting those rigorous international standards around the ICT, around cyber security, around data security. In terms of data storage, we would want to ensure that wherever that data is being stored, that they at least have similar data protection laws as ourselves. So that's at a minimum, yeah.
Thank you, Leslie. Our next question coming off of social media from Ms. Octavia Gibson. What criteria do new participants have to demonstrate to obtain access to the ACH and RTGS systems?
Could you repeat that question? What criteria
do new participants have to demonstrate to obtain access to the ACH and the RTGS?
So each one of the operators have their own operating rules and requirements around access to their system. So they have their list of criteria, and they are very robust in terms of risk mitigation, because this is a very, in terms of money, in terms of the activity that will be done, it's important that persons wanting access to the system meet their risk management criteria, right? So in terms, but I cannot share with you individually what those entities have in place, right? You will probably have to approach them, but overall, we will want to ensure, we the regulator will want to ensure that those criteria in terms of access are fair and non-discriminatory. We all have that for part at times. Yeah, so I don't know if anybody else would want to add a little onto what I just said.
I just want to add in terms of the RTGS, it is a system that's restricted at this moment to the financial institutions. And the structure in our legislation at this time would only allow us to open accounts for financial institutions, the government, and other state bodies. So that would require reform if we're opening up the RTGS to private participants. Again, this is something which would be part of the whole considerations when we're looking at upgrading the RTGS and studying what is the way forward.
Thank you, panelists. We have a question coming in from social media again. Any view of the timelines for the it's contagious, Leslie, operationalization of the new licensing regime and how long an application will take? I'll repeat that. Any view of the timelines for the operationalization of the new licensing regime and how long an application will take?
Yes, in terms of for the new licensing regime under the new legislation, I suppose. Right, so first of all, we are now in the discussion stage and consultation stage of developing the new legislation, right? So there are steps to that process. after we develop the legislation now has to go to Parliament to be passed into law, and then that will come into force. So the licensing of entities will come into force based on that new law. What we do have, we are licensing payment system providers based on Section 36cc of our Central Bank Act. And if you are interbank payment operator, payment system operator, you fall under the Financial Institutions Act. So this was one of the reasons why we had to undertake this reform, because we have very fragmented piecemeal legislation, and we do not have a proper law to guide how we treat with all payment systems, both interbank and non-interbank payment systems. It's quite fragmented, and therefore the law will give us a lot more teeth in terms of what, in terms of regulating these entities. I don't know if any one of my fellow panelists wish to add anything.
Thank you, Michelle. We have another question coming in from social. How can local blockchain companies work with the central bank to be included in these conversations, to collaborate on these solutions, or be part of a local sandbox?
As you know, they should know that we have launched a joint innovation hub, because we have been receiving questions around some of these initiatives via our innovation hub. And right now we are finalizing the sandbox, but for the sandbox to become effective, it requires each of the regulators involved in this initiative, the TTSEC, the FIU, the central bank, to make some amendments to their legislation to allow the sandboxing. So we are hoping that by the end of the year, hopefully, that legislative amendment could take effect, that we will be able to open up the sandbox more widely to accommodate such activity, such initiative, sorry.
Thank you, Leslie. Thank you, Leslie. We have a question from Mr. Ian Chinapu. He asks, what is the expected timeline for legislative changes, and what role do you envisage for potential market participants?
Okay. Well, in terms of the legislative changes, we cannot pronounce on that, but we are working with a timeline of 22, the third quarter of 2022, to have the draft legislation finalized, as well as the policy proposal, following feedback from all relevant stakeholders. And that will then be submitted to the Minister of Finance for approval of the policy by Cabinet, and then taking forward in terms of making of the legislation. So I do not have a timeline in terms of the enactment of the legislation. We only have a timeline in terms of when we wish to complete the draft legislation and the consultation thereof.
Thank you, Michelle. We have a question from Ms. Celise Haynes. She indicated that on one of the slides, we stated that deposit taking is a restricted PSP activity. And she asked for money coming into the system to a PSP via example top-ups. Would that be considered deposit taking? Leslie, could you take this one?
Just repeat again for clarity, Rennie. Repeat the question, please.
Sure. On one of the slides, we indicated that deposit taking is a restricted PSP activity. And Ms. Haynes is asking for money coming into the system to a PSP via top-ups. Would that be considered deposit taking?
Because it should only, so in terms of e-money, right, where they are issuing these wallets, and the entity will have to safeguard these funds, which are for payments, it would not be considered a deposit. So this is monies coming into a payment service provider No, so from that point of view, no, it should not be considered a deposit. They have to safeguard. These are for making payments. Right, that's the activity we are regulating, payments. Some may be very short term, depending on the activity they collect and they remit quickly to merchants, or you may be holding for a longer time period if you are the e-money issuer. But it's not to be considered deposit.
Thank you, Leslie. Moving on, we have a question from Ms. Avalon Moore. Is the decision to explore the implementation of a CBDC in Trinidad and Tobago demand or supply driven? Michelle?
I was actually going to pass that one to Leslie in terms of because it's still so exploratory. There are different types of CBDC arrangements, whether you want to explore a retail type CBDC or wholesale type CBDC, in terms of whether it's going to be anonymous or not, whether it's permissioned or not. So there are lots of different factors that go in to decide whether you are going to go forward with a CBDC or not. Part of the process involves, as I mentioned earlier, whether you have a clear use case, looking at the costs and benefits of going forward with a CBDC versus enhancing your existing payment system infrastructure. So those are some of the considerations that you will have to look at before determining whether to launch a CBDC. So the expectation is that going forward with the CBDC would assist you in terms of, it will have a real benefit in terms of enhancing your payment system infrastructure, right? Because it could be quite costly and it could give rise to other risks, probably in terms of financial stability issues of monetary policy issues. So there are lots of factors that need to be considered in making that decision. I don't know if Leslie wants to expand.
I think you did a good job. Each country has to understand its own their own circumstances, and very important is the use case, as you said. What will be the purpose of the CBDC? I mean, some countries, I mean, and so like for the Bahamas and those of the islands, you see a use case for financial inclusion. In what other countries might be looking at improving efficiency. We need to come up with a use case because, as Michelle indicated, it's very costly. This is a very costly undertaking. And as some countries, like in Europe, would have indicated, they think that their infrastructure with the instant pay and those sort of things are at a very state-of-the-art level that they would not consider a CBDC at this point in time. So for us, it is something not to be rushed into. It has to be carefully thought out because of how expensive in terms of time and resources. So we will want to do our research, undertake our cost-benefit analysis, and then decide what is the best course of action for Trinidad and Tobago. Thank you.
Thank you, Leslie. Thank you, Michelle. We have a question coming in on social. Given the potential risks associated with money laundering and terrorist financing using e-money, would CBTT be developing guideline frameworks to assist stakeholders with money laundering mitigation?
I'm not sure if the participant, or the person who asked the question was aware, but there is currently exists an e-money issuer order that was made in August, I think published in August of 2002. And that order already prescribes certain risk management controls with respect to e-money. There also the AML CFT supervision of e-money issuers currently falls to the Financial Intelligence Unit, and the central bank would have been working collaboratively with the FIU to develop policies and procedures around the AML CFT supervision of these entities. Of course, because there are limitations in terms of threshold size and transaction limits, the AML CFT is proportionate and takes into consideration those issues. So the expectation is that products like e-money issuance are supposed to also serve as financial inclusion mechanisms, and therefore the AML CFT applied will be proportionate to that risk. So the simplified due diligence applied to persons who issue e-money based on their threshold or wallet sizes.
Thank you, Michelle. We have a question from Astrid Douglas. What was the rationale for the expanded definition of payment systems?
Really a simple rationale. We actually look at the provisions that we have now under the Financial Institutions Act on payment systems, and there is an existing definition there that we thought was quite appropriate and suitable, and it covered all the aspects, including rights and obligations. And what we did was really lift that and expand it to the non-interbank space. So that was the rationale.
Thank you, Nicole. We have a question from Michelle Salandi. Will data portability be supported for consumers under the payment system bill? If I'm interpreting this question correctly, is it that customers will be able to transfer from one system to another? I believe that's what is being asked. I don't know if Leslie wants to take this one.
We have put proposals in place for interoperability, right? And we are saying that we are asking because, like, when you looked at the Bahamas, you saw that for payment service providers to be able to, I think they have 9 payment service providers that would have had to be part of their CBD initiative. They all had to interoperate with their systems. So likewise, we will be insisting that where persons are implementing these activities, that it allow for seamless payments to move across the various payment service providers. So I'm answering it from that perspective. Right. So there are proposals there in common to have adoption of common standards. Right. So I don't know if anybody has anything additional to add.
Answer, Leslie, in terms of prescribing common standards for regimes to make sure that interoperability exists. So that's the answer.
Thank you, Leslie. Thank you, Misha. We have 2 questions from Celise Haynes. I'll ask Leslie to take the first question and Nicole Chapman to take the second. Firstly, have any EMI licenses under the 2020 Act been granted to date? And is there any publicly available data on EMI applications thus far, whether aggregate or disaggregate? So I'll ask Leslie if you could take the first one.
We have received a few applications that are currently in progress, right? So we have not issued a license as yet, right? So we have no data to share at this point in time, but we have developed reporting forms. So as soon as they do start to operate, we will be able to collect information on the EMIs.
publication of aggregate data. That's something that we're permitted to do. We, of course, will not go into individual licensee information, but we can present aggregate data and analysis. And certainly the persons that we've licensed so far, that would be something that we would also publish.
Thank you, Leslie. Thank you, Nicole. We have a question from Carlos Newton. He asked that he notes that we touched on cybersecurity briefly, and he's asking, seeing that we are making changes to the payment systems, shouldn't updating the current cybersecurity be updated simultaneously to treat with cyber attacks that can occur with the updates?
I believe I would have spoken to this before. The legislation that we are working on is going to take some time to be enacted. We envisage it might be around 2022, 23 at its earliest. But in the interim, and during the presentation, we would have indicated that we are looking to amend our guidelines to treat with some of key risk in the interim. So that work is happening. There is a regional working group that would have looked at cyber risk and cyber security, and they would have developed a principle-based guideline, which we plan to leverage because the work on that regional working group recently concluded, and this is going to inform our guideline on cyber risk, cyber security. So we will be looking at publishing a technology and cyber risk guideline in the near future.
Thank you, Michelle. We have a question from Janelle Smith. She thanks us for a thorough and comprehensive presentation and asks, in relation to the technical assistance provided by the IMF, whether this is in the form of consultancy or just guidance. Nicole?
The technical assistance, it's a technical mission, so we are getting actual technical input into the work that we have to get done in the development of the policy document and in the preparation of the draft bill. So it's actually direct input and assistance, and we're working together. So it's really a nice synergistic kind of relationship.
Thank you, Nicole. We have another question from Rosanna Harry-Adam. Do you have any plans to modernize the settlement system to support instant payments in the future, similar to what was done by the Central Bank of Aruba?
Leslie or Nicole, you want to take that one?
Well, just to say that discussions are ongoing in terms of the modernization of our RTGS, and also even from the wider perspective as well of enhancing cross-border payments. So these are things that are being discussed internally, and so it's difficult to say right now where it will go, but the discussions are taking place internally in terms of upgrading our RTGS in light of the new developments occurring in the space.
Thank you, Leslie. We have a question from Nicolana de Silva. She says the government of Trinidad and Tobago recently conducted consultations surrounding the modernization of the legal framework for electronic transactions. Is the central bank working along with the government in its efforts to ensure that government-issued checks are able to be processed under the efforts to allow for the automation of electronic check clearing in the short term?
Probably you could speak to that.
Well, right now we are, as some of you would be aware, the central bank by its statutory mandate does act as governor, as the banker to the government. So as part of that mandate, we do work with the government in terms of its check issuance and processing regime. Definitely going forward with the revamp of the ACH and RTGS improvements that the panelists would have spoken to, most definitely central bank would be working with government to ensure that its checks could be processed through the system just like those issued by our commercial banks. I don't know if Leslie or any of our panelists want to add to that, but definitely there is a collaboration, an active, very active collaboration between central bank and the government in relation to these types of matters. Okay, moving on. We have a question from, one second. We have a question coming in on social media, and this one will be open to any member of the panel. Explain how we can take advantage of the new payment systems and financial inclusion in Trinidad and Tobago. While the panelists collect their thoughts, my 2 cents would be try and educate yourself. Central Bank's website is a great place to start. Read up on the issues, and just in terms of technology, rather than fear it, embrace and study and educate yourself.
Excellent, Renee. Yes, education is key. Awareness is key. Central Bank intends to work with all its stakeholders, even through the National Payment System Council, in terms of raising awareness of payment system, because the payment system, or going towards a more electronic payment system, is only as good as the persons who sign on to it and willing to adopt it and use it, right? And as Renee would have indicated, it means letting go of the fear of it and really embracing what it can do for us and how it can benefit and make our payments easier, faster, more efficient. We do recognize that with any development, there's risk, and our role as regulator is to try to mitigate those risks by ensuring that those who operate payment systems, whether it's a payment service provider, payment system operator, have robust controls in place to manage things like money laundering, cyber risk, make sure that the consumer is protected and do not lose their funds. So that is the role of the central bank, where we will have to exercise that robust supervision and oversight of any person entering the system.
Thank you, Michelle. Just looking at the time, so we'll take just a couple more questions before we wrap up. We have a question from Mr. Carlos Newton. Oh, sorry, that one was addressed. We have a question coming in on social. What are some of the KPIs that will be used to determine the success of a CBDC, and how will these KPIs be monitored?
Renee, that circles back to our comments on the CBDC as to where we are and what's the work that still has to be done and the analysis that still has to be conducted, and the points that one will be looking at in that process. So that may have been covered already.
Okay, one last question. Through social, they say that stablecoins are now integrating with Visa, used in merchant payments and providing interest to holders. Directly conflicts with EMI regulations. Will the central bank be adapting to these innovations?
Okay, I will start, and my fellow panelists could add. In the presentation, I would have mentioned that is actually the fifth leg, one of the areas in terms of the forward-looking view, where we're looking at new multilateral payment platforms, including global stablecoin arrangements. So we do intend to look at it. It's going to be part of our plan, but we have not looked at it as yet. Yeah.
Okay, thank you, Michelle, and thank you to our panelists. A very special thank you for those of us joining us on the live stream in WebEx, on Facebook and YouTube. Thank you so much for joining us. We hope that you learned something today in relation to payment systems, what has been taking place, our plans for the future, and the central bank's role in all of it. We want to wish everybody a great day, stay safe, and take care.